Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian economy because we've now got some more data released by the Kremlin. It's a small amount of data that we get these days, so anything that we do, I want to jump onto and share it with you. And unfortunately, from Russia's point of view, the data in today's video doesn't sell a good story. Things are getting worse on a monthly basis. So the figures have been released for 2025 for oil and gas revenue, and they show that Russia has 8.4 trillion rubles worth of revenue. That sounds like a lot, doesn't it? That's somewhere in the region of 109 to 110 billion. That is down 24% year on year. That is a massive fall. If I was the chief executive of a company that was listed on the stock exchange and I announced a 24% drop in revenue, the share price would absolutely crash. This would be an absolute disaster. I'd probably lose my job because 24% year on year for your biggest single product, your best selling product, how are you going to turn that around? And this is actually the lowest level that Russia has seen since 2020. So that's before the war in Ukraine started. The war started in 2022. So we're going back 6 years to see a bigger fall than this. So this isn't good news. And unfortunately, in terms of the deficit, the difference between what Russia is spending compared to what it's earning, that came in at 5.6 trillion rubles, which is around $72 billion. That equates to 2.6% of GDP. So if you think about that in the context of a budget, if you were spending 2.6% of your GDP on education, for example, that would be quite a big number. To be spending it on the deficit, basically you're spending more than you're earning. It's mostly down to the war in Ukraine. That's not good budget planning. That tells us that Russia is struggling. If you put this into the context of your own life, if you were constantly spending more than you're earning, at some point you're going to run out of money. You're probably going to go bankrupt. Now, in terms of what's happened in January, the oil and gas revenue came in at 393 billion rubles, around about $5.1 billion. That was down 50% year on year. 50%. So if I'm the chief executive of that company announcing a 50% year on year fall, I'm toast. I'm basically out the door. The shareholders are going to want to see somebody else coming in to turn things around. And this was actually the lowest monthly intake from the Russian revenue point of view since July 2020. So that's the least amount of tax that Russia has received for 6 years, almost 6 years. So that's not good news. And if we compare what happened in January to December, in December, the revenue was 447 billion rubles, so $5.8 billion. So we're seeing month on month declines. It's not just an annual thing, it's happening really rapidly. And the reasons why Russia is seeing this as well, firstly, there's been a dip in oil prices. Well, there was in December and January. Oil prices are moving around a lot at the moment because of what's going on geopolitically. But for the period that we're talking here, oil prices were down. But worse than that, from Russia's point of view, it was having to deeply discount its oil prices because of the sanctions that were applied against Rosneft and Lukoil, the two biggest oil companies in Russia. And also, we've seen the ruble getting stronger, and that's bad news for Russian companies and Russian taxes because they're having to convert their revenue into rubles. And when the ruble is stronger, it's a smaller number. Therefore, they report smaller tax, smaller profits, and pay smaller amounts of tax. So, all of that's really bad news. Now, in terms of 2026, the Russian budget is estimating 40.3 trillion rubles of income. That equates to around $520 billion. Total spending is 44 trillion to 568, and that equates to a deficit for 2026, the planned deficit of 3.8 trillion rubles, around $49 billion. That's 1.6% of GDP. That's obviously better than 2.6% in 2025, but only if Russia manages to hit its budget. And one of the things in that budget is an assumed sale price per barrel of $59. Now, at the moment, Russia isn't anywhere near $59. I reported recently that it's some of the deals that Russia is doing are coming in around $25 to $30. So that's about half of what the budgeted level was. So if Russia only manages to achieve those sort of levels for a sale of its oil, then that budget deficit is going to be hugely greater than 49 billion. We could see it growing rapidly. And on that point, a think tank in Russia has reviewed the figures and looked at what's happening in the international markets. And they are assuming that energy revenues will come in 18% below the original budget assumption, and total revenues will be down by 6%. And that equates to a revised revenue total of 37.9 trillion rubles, around $490 billion. And that would mean that the deficit, if those figures come through, would be between 3.5 and 4.4% of GDP. So that is a massive increase against the actual deficit of 2.6% in 2025. And what does that mean in real number terms? Well, it means a shortfall of 8.3 trillion rubles or $107 billion, or $134 billion if we're at the upper end of that range. So Russia is therefore going to have to fund all of that. Now, where's it going to fund it from? Well, it's going to have to fund that deficit from its reserves. Now, the reserves are currently sitting at 4.1 trillion rubles, $53 billion. So if the shortfall comes in at $100 billion or $135 billion at the upper end, obviously you can't fund that from $53 billion worth of cash because it's not enough. So what this is telling us is that the current situation in Russia and the estimated shortfall against the original budget means that Russia will run out of cash in 2026. We don't know exactly when that's going to happen, but at the current rate of deterioration in revenue, it could happen within the next 6 months. So what's Russia going to have to do? It's going to have to start raising debt to fund these deficits. But unfortunately, from Russia's point of view, the situation is worse than this because the think tank estimations don't take any account of what's going on with India. It assumes that sales will continue to India. But if you've been following the channel, you'll know that India recently agreed with Donald Trump that it would stop buying Russian oil in order to get a preferential tariff of 18% on Indian exports to the USA. And the USA market is the most important from India's perspective. It represents around 20% of India's exports compared with around 1% for Russia. So from India's point of view, it's a no-brainer if you're having to decide which economy you want to continue dealing with. But from Russia's point of view, it's an absolute disaster. Now, in terms of what's the latest situation, well, in January, India imported 1.2 million barrels of oil per day from Russia. Now, that was down by 12% against the figure for December and down by 22% compared with the November numbers. But if India does switch off those purchases, then that means that it will be another 1.2 million barrels of oil lost from Russia's point of view. And there simply isn't another buyer to be able to step in to take up that volume. China is already wavering in terms of its volumes because of the risk of secondary sanctions. So Russia won't be able to find anybody to send that oil to. So firstly, it will lose its revenue, and that's going to be disastrous in terms of the deficit and the fact that Russia will need to find more money to fund this shortfall in spending. But also, it could be catastrophic for production. We've talked about this many times before. You can't just switch oil production on and off if you see a shortfall in demand, because oil facilities are not structured like that. They are set up to constantly flow. You want to keep an optimal amount of oil coming out of the ground. If you don't have anywhere to send that oil and you can't store it anywhere, which Russia can't, then the only other option would be to stop the flow, to actually cap the oil wells. And the problem with that is that when you come to restart them, it could be just impossible to do that. It might just not work ever again. So this is a really big problem from Russia's point of view, not just because of the shortfall in revenue and the fact that it's having to fund the deficit, but this could mean major problems for the Russian oil industry for the medium to long term. And another factor that's hurting the Russian economy is what's happening with the Russian ruble. This chart shows the movement in the exchange rate between the dollar and the ruble over the past 12 months. And you can see that the value of the ruble has increased from around 98 to $1 to 77. So it's actually trading at one of the highest levels at any time in the past 5 years. And that represents bad news for the Russian economy because Russian businesses have to report all of their revenue and therefore all of their profits in rubles. So when the ruble strengthens in value, that means that the equivalent amount of income that they've been paid in international currency is lower. So $1 billion worth of revenue would actually convert to 98 billion rubles a year ago. Today, it would only be 77 billion. So that's a 21% fall in Russian revenue reporting, despite the fact that the total income is exactly the same. So what's happening at the moment is that the strength of the ruble is reducing the amount of revenue that Russian businesses are declaring. It's reducing the amount of profit and therefore reducing the amount of tax. And that means that all Russian companies that are reporting their figures are paying less tax. And that's an absolute nightmare from the Russian economy's point of view, because these companies are doing exactly the same amount of trade, but they're paying less tax. Well, they would be doing the exact amount of trade if it wasn't for the sanctions. So we've got a number of different factors that are really pushing down on the Russian economy at the moment. So Russian companies are struggling to find buyers. They're struggling to be able to get their profit margins because they're having to cut their prices to encourage people to buy their products. And in addition to that, the strength of the ruble is also reducing the ruble equivalent revenue and profits and therefore taxes. So we're seeing a number of different forces that are really countering against the Russian economy growing. And I think what we're going to see in 2026 is a much bigger deficit in the economy, which will have to be funded by debt because Russia simply doesn't have enough cash in its reserves to keep funding this. It does have a lot of gold. So the one saving grace from Russia's perspective is that it could sell more gold. But that's equivalent to selling the family jewels. Once you've sold that gold, it's gone forever. So Russia doesn't really want to do that. It wants to manage its books to be able to balance its cash flows. But unfortunately, that looks impossible, and the situation is getting worse on a monthly basis. And if India does stop purchasing Russian oil, then it could mean that Russia runs out of cash very quickly in 2026. And then it'll be reliant on whether or not it can place bonds with countries like China. Will it be able to persuade China to invest into Russia? At the moment, I'm not sure, because China's already reconsidering whether it should be buying as much oil from Russia. So the overall summary of today's video is that the current situation looks dire from Russia's point of view, but unfortunately the outlook for 2026 looks even worse. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you have liked what I've said, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Don't forget, I'm running my competition at the moment, which is a way of raising funds for the channel. I need to sell some tickets in order to be able to deliver the prize of £250,000 in cash. So if you could help out, if you'd like to get involved, then please scan the QR code on the screen now or click the link in the description below. Thank you to everyone that's supported me in other ways. If you bought me a coffee or sent me YouTube super thanks or signed up as a patron or a member, I really genuinely appreciate that support. Thank you so much. Really helps to keep me going. And here's something to put a smile on your face.